Now, here are some terms to know. I've mentioned some of these before. We've got the compensatory stock option or purchase plan. Where are they valued? So these are valued at the fair value of the options issued, right? So when you are being issued a stock option plan, well, the fair value of this, like what's this recorded at? Because that's super important for literally anything in accounting is what do we record these numbers at? Well, this is the fair value of the options issued, right? So the fair value, you can purchase at $60. How many shares? So 1,000 shares times 60, that's your fair value. What about definitions? Well, we're going to see this chart in a second, right? This is important. This is think of this like your 401k as well, right? So you've got your vesting period. Maybe you have to work at your company for 5 years. This is when you can begin your 401k, right? The matching happens during the vesting period. The vesting date ends. The exercise date in this case would be when you exercise the stock options. In the 401k example, that's when you can leave and take your money with you. Back to the terms to know. So the option price or the exercise price is the price stated in the option contract, the price at which the holder may purchase the underlying stock. Nothing crazy, right? So in that Best Buy example, that was the price you agreed upon that you could buy it at. Now, the fair value might be up or down depending on the date when you actually exercise. So exercise date. This is the date that the option must be exercised by. So keep in mind that it could expire worthless because if they say you can buy their stock at 50 and the stock drops to 45 and your expiration date is coming up and it never goes above 50, well, you're not going to buy stock at 50 to sell at 45. I mean, you just wouldn't do that. I mean, unless you want to do like a tax loss harvesting thing, but that's not relevant here. So yeah, that would expire worthless and that option would not exist anymore after that. All right, so yeah, that's the date that you have to do it by. You have to purchase the underlying stock by. What about your fair value of the option, right? We just talked about that right here. This amount is determined by the economic pricing model, such as the Black-Scholes method, right? So the fair value of what needs to be recognized is like I said, the amount of shares times the value of the shares. So if it's 1,000 shares times $60 a share, that's going to be $60,000 worth of potential payouts in stock to the employee. However, the value of the option, right? Remember, because that option is a piece of paper. That option is a piece of paper that allows you to get that $60,000 worth of shares, right? So that option, that piece of paper has its own value. Now that value you'll never have to determine, so this gets you $60,000 worth of stock. Maybe the value of this piece of paper though is $70,000. And that's determined through, again, valuation methods. We're not going to worry about that. We're not going to have to figure that out. Just like this, if this was an option in hedge accounting and derivatives, you could have a $60 stock, right? But maybe the option's worth more than that because of, the demand for it and the value that option brings to those who want it. What about the grant date? Well, this is the date that the stock option is issued to you, right? So this is when it's granted to you. Pretty straightforward. Your vesting period is the accrual period. That's when you earn the right to this over, right? So you have to work there for 3 years. The vesting period would be 3 years. So much like a 401k, this is the period that the employee needs to work for the company in order to fully earn the stock option. And lastly, the service period is generally the vesting period, right? It's the period during which the compensation expense is recognized. So the service period is important for the company because that's when you recognize compensation expenses over the service period. However, generally it's going to be the same as the vesting period. As I mentioned, here's our nice little graphic or chart. Memorize this, be familiar with it so you can bring it forward going on and visualize it when you're answering questions.